Good morning, everybody. It is Wednesday, the 17th of November, and it's 5 to 8 in the UK. Right, dollar index had a really good run. Dollar index is about 150 pips higher from our buy signal, which was the break above this fib level that had held so well before. Pretty clear, we broke through the 200-week moving average as expected. Right, we're on to the 50% fib up here. So we've had a 50% recovery in the dollar now. From the 50% recovery of the big move down in 2020. It's taken almost the whole of 2021 to recover. Now, this is, for me, quite a congested area. You can just see it from the price action, really, going through all the way through 2019, sort of low 85, 90, 95, 80. This low is 95, what is it? 95, yeah. So it's all around 95, 80. This is a spike low, which has gone a little bit below there, but you can just see that sort of 95, well, the 50% fib is exactly 9600, and we've just gone through that. So anywhere from sort of 9600, 9650 in my book, it's going to be strong resistance. And so I think there's a good chance we'll hold that for now. We're very overbought on the daily chart. We're getting overbought on the weekly chart. I think that's just a decent enough run for now. So I don't see the market necessarily turning around and collapsing. We'll have to watch for signals on that, but I wouldn't be surprised at all to see some consolidation before the market pushes higher. Maybe we need to see some more inflation numbers, unemployment numbers, retail sale numbers, something like that before we get the next push higher. I wouldn't rule out a significant pullback. We'll see what happens today. This candle for today obviously is starting to look quite negative in its own, not even 8 o'clock in the morning. We've pushed up and rejected so that 96 area and come back already to 95.90. If we were to close down on the day, that would be quite negative shooting star, or even if we were to close right where we are now, that would be something of a shooting star anyway. Quite, negative candle showing rejection of some of that congestion area. I mean, if we got really bad and we closed below 95.40, then we'd have a bearish engulfing candle, and that would be pretty negative indeed. But no point in guessing. Yesterday's break above this trend line, of course, was a real nice move. Even that was a big move. But for now, I'm thinking that dollar index has a good chance we've topped out. Today's candle is already showing that. We don't have any particular negative candles on the short-term chart, so I'll leave that for now. Fantastic trade opportunities yesterday, actually. Gold was certainly one of them. We had that resistance around the 1870 area, around that trend line. We overran a bit, but not quite as far as 1877, so no stops were triggered, and the market's pulled back. Not only is it pulled back, we've got a bearish engulfing candle, a nice big bearish engulfing candle there with a long upper wick, which tells me that we've truly rejected that trend line and we should start to head lower. Let me just scale this. There we go. There's your trend line, shown it to you before many times. You know it was there, and we've got the rejection of that. I think it's likely we will see the first fib support level of 1840 tested. Who knows, maybe today. I would actually risk a long position on the first test of that level. I think that 1840, 1835 is a good support level. We've got that trend line there as well. We could just bounce around there for a little while, of course, but eventually if we do break below 1835, which if we're going to break anywhere, I think it's probably a break below there, then we're down at 1819, 1817. So just using the fib levels there, the fib levels are tying in nice with the previous price action anyway, so I think that we can rely on those. Clearly we're going to need a break above 1877 if the bulls are going to see this run, but as I said to you yesterday, looks unlikely. We were trying shorts at the 500-day moving average. Now that worked really nicely too. We've backed away, and again we have a bearish engulfing candle there. If I blow it up, you can see it. New high, closed below the previous candle low. In fact, 2-day candle low. So we're making a small recovery today, but clearly that sort of 25, 35, 45 area is going to be major resistance again, and we would have to get through that if we've got any chance of running up to the trend line up there. We will deal with that situation if it occurs, but right now it seems more likely that we head to the downside. Let's put some fib retracements on there just to give us a guide as to where we could get to. So 24.45 is the first decent target to the downside. We've had a beautiful move in the euro US dollar. We've been calling that lower ever since we hit that 116 area for our sell level. And basically because we saw the breakup in the US dollar, so we expected the euro to fall. It certainly has. Hit my target of 112.90. Now, this we bounced off. We overran it to 112.60. Was it 112.63? We've actually got a good support level down here at 112. Sorry, 112.90, 112.70. And I do think, considering how oversold we are, look at that on the weekly chart and probably on the daily chart too. Yeah, we're getting oversold on the daily chart. So I think that there's a good chance. Well, certainly we hit my target for profit taking on the shorts. So I'm happy about that. That was a real good target, and I'm happy that we're out. And I do think we're going to get a decent bounce. Obviously, we've got a bounce already. If we get a chance to try a long down there, it could even be worth it. Oops. Let me just put some fib levels on there. And grab this and move it out a bit. Yeah, I think we can have a decent bounce back, certainly to 113.50. Now, I like the way the Fibonacci levels have tied in here. I like the way the 61, there's that swing high at the 61.8%. So I'm going to take that as another fib level and project that down to there, to the previous low. And that gives me a resistance level around 114, just above 114.00 actually. And then I'm going to take another set of fibs and I'm going to put them on here, just above that fib level we had there. Right, that gives me a level of around 113.65. So that's going to be my first resistance level for today, for me anyway. So as you can see from, I've actually got to correct the sheet. On the cheat sheet, I didn't put the number in correctly. It should be a buy level at 112.90.70 with a stop below 129, with a stop below 112.55. I'll correct that. And the target for me for that bounce is 113.50. So that could be a nice 60-70 pip bounce when we're risking only about 20 pips or 30 pips or so, which would be worth doing. New Zealand dollar yesterday was really nice. We had a shorting opportunity at 70, 80, 70, 90. That's right up there at this peak. And you can see the market drifted off nicely to our target, which was around 70. 69.90. What was the low there? That was 69.80, just below the target. So pretty much caught the high of the day, pretty much caught the low of the day. Today we've bounced up to 70.18. Now for me, the resistance level for the day, 70.25, 70.45. It's quite a wide band, but it's around this sort of moving average and some Fibonacci levels. If we were to get up to 70.25, 70.45, then I'm looking for the market to reverse from there. Stops above 70.60. Canadian dollar versus Japanese yens had a good recovery. Looking at the 4-hour chart as we head towards resistance at that trend line, which is around sort of 91.50, 91.60. So we would need a stop above 91.70 on any shorts at that resistance level. Euro yen, we had a sell signal at the start of the week on that break to the downside, which was just a continuation of the bear trend anyway. So the market eventually hit our target down there at 129.40. So that worked really well. Now we're bouncing back up towards the break point, which is around 130.20, 130.40. So it's quite a wide band of resistance today. If we get there, we haven't got too far to go, 30-40 pips, and we are there. So that is my resistance level of the day, and I have shorts needing a stop above 130.50, which is around, well, obviously around this level here. So that should give us enough of a leeway on that short position there. Canadian dollar was a beauty yesterday, right down at our support level at the 38.2% fib. 124.90, 124.80 was the buy level, and we just rocketed right up off there. So that really worked well. Today I've got the same support level. There's a minor level down here at 125.30, 125.20, but we could be bouncing around. You've seen how I've suggested that the dollar index may not go any further, so we might bounce around between this sort of 125.00, 124.80 level, and then the 126.00 area. This might happen for a while based on that possibility for the dollar index. So just watch these levels again down there. Another beauty, very much respecting that first resistance level there at 134.60.70 yesterday. We had a real decent profit as the market dived to the 134.00 area, so 60 or 65 pips potential profit in that. We've tried it again this morning and rejected it, so we might be heading back down to 134.00 there again for some profit taking. Again, bear in mind that perhaps the dollar index has had enough on the upside for now. So again, we could just be ranging. You can see we've got, this is a midpoint in between the fib levels. Let's put a trend line on there. I think I can take that point and that point. Actually, oh well, it's sticking to that. That'll do. So yeah, 134.00, 133.90 is your first target on the downside, and then 133.60.50 would be support if we continue to go lower. So just watch that. We might trade within that range if I'm right about the dollar. GBP versus the Canadian dollar, also pushing high. We seem to be holding the 100 period moving average on the 4-hour chart right now. But if we can get up to 169, I've got 169.30, sort of 169.50, then we've got a good resistance level there. And as I've said in the report, a short would need to stop above 169.70, and I'm guessing that's something around, yeah, that would be a break above the 200 period moving average on the 4-hour chart. So that's the green line. That our stop level is above there. That's it for today. There are a couple more trade ideas on the spreadsheet, as you already know, but yeah, we're looking for a bit of a consolidation today. We'll see if that's right, and we'll see if the dollar index does hold those levels. Good luck if you are scalping away today in the markets, and we'll chat again tomorrow.